Selamat pagi Bapak Ibu Mitra Samuel Sekuritas, khususnya para tamu undangan institusi yang kami hormati. Good morning to all clients and partners of Samuel Sekuritas, particularly to our institutional clients and our panelists. Welcome to Samuel Sekuritas Economic Outlook, entitled Dive Deep with the Expert, Economic Trends and Issues in 2022. As we progress to the new year, despite the challenges we have faced, we believe that the current economic recovery trend will be carried forward into 2022. Bapak dan Ibu yang terhormat, meskipun keyakinan akan recovery ini besar, namun masih ada isu-isu yang harus kita cermati agar keberlangsungan pertumbuhan dapat dijaga. Oleh karena itu, dalam kesempatan ini, we are very honored to have such outstanding speakers and prominent figures to discuss these issues and be part of Samuel Sekuritas event. Lastly, this event is part of Samuel Sekuritas' commitment to keep providing the best services to our clients and partners. We thank you for all of your participation. And without further ado, let's begin Samuel Sekuritas 2022 Economic Outlook, and we hope you find this event insightful. Thank you very much.
Firin atas sambutannya. Selamat datang dan semoga sehat selalu untuk Bapak Ibu Mitra Samuel Sekuritas Indonesia dan para tamu undangan yang kami hormati. Terima kasih sudah berkenan hadir Bapak Prof. Budi Frensidy dan juga Bapak Prof. Kuncoro. Thanks for coming Mr. James and Mr. Stephen. Welcome to Samuel Sekuritas Indonesia 2022 Economic Outlook entitled Dive Deep with the Experts, Economic Trend and Issues in 2022. Perkenankan saya, Fikri C. Permana, memandu acara kali ini. Hingga lebih kurang 2 jam ke depan, acara ini akan berbentuk presentasi dan diskusi, di mana diskusi dan presentasi akan nantinya dipandu oleh Bapak Prof. Budi Frensidy, dan tentunya akan bersama dengan para expert yang telah Bapak Ibu kenal semua. And presentation will take a 10 minutes for each panelist. Seterusnya, diskusi juga akan dipandu dalam bahasa Inggris. Dan jika Bapak Ibu memiliki pertanyaan, dapat disampaikan dalam bahasa Indonesia ataupun juga dalam bahasa Inggris. Di samping itu nantinya, di tengah acara juga akan diselingi dengan beberapa polling yang akan kami lakukan. Dan sebagai informasi, nantinya di akhir acara akan ada banyak door prize dengan hadiah utama handphone terbaru. Karenanya, mohon untuk tetap stay tune hingga acara berlangsung. Dengan tidak memperpanjang waktu, izinkan saya memperkenalkan moderator pada kesempatan kali ini, Bapak Profesor Dr. Budi Frensidy, SE.MA. Prof. Budi is a professor of economics from Universitas Indonesia. He has published various papers and books on financial mathematics and capital markets. In addition to serving as a lecturer in the Faculty of Economics of Universitas Indonesia, he currently serves as an independent commissioner at PT Samuel Asset Management. He is also a very capable investor and recently became one of the winners in the trading competition held by Samuel Sekuritas Indonesia in last October. Now, allow me to invite Mr. Professor Budi Frensidy to guide the discussion. Please, Pak.
Yes, thank you. Thank you very much for the introduction, Fikri. So, let me greet our valued customers of Samuel Sekuritas. Good morning, our valued, honored clients of Samuel Sekuritas Indonesia, and also especially to our panelists, speakers for today. Yeah, thank you very much for your presence at today's event, entitled "The Economic Trends and Issues 2022." We have 3 speakers, panelists for today. So our valued customer or clients of Samuel Sekuritas would like to hear the inputs and also the valuable input and sharing of our expert in the economics and the financial market of our three speakers. Without further ado, let me read the biodata, the curriculum vitae of all our three panelists for today. First, Professor Ari Kuncoro, PhD. Prof. Ari is a rector, or what we call chancellor of Universitas Indonesia since 2019. Before, he served as the Dean of Faculty of Economics and Business for two terms, starting in 2013 to 2019. And also, Professor Ari is also visiting research professor at Brown University, one of the Ivy Leagues in the US, and also visiting scholar at the International Center for the Study of East Asian Development, Japan, and also visiting scholar at the ANU, Australia. And the education is a PhD in Brown University, and also professor about in the year of 2009. And next, the second speaker. It is an honor for us to have three speakers for today's event. The second panelist is Mr. James Walsh. He's a senior resident representative since September 2020, Jakarta office, and also advisor, monetary and capital market from June to September 2020 with the office in Jakarta, Indonesia, and also deputy division chief from October 2013 to June 2020 with the home office in DC, and then he also served as senior economist at Asia Pacific Department from January 2010 to October 2013 with the office at Washington DC, and before that he's also senior economist for the Western Hemisphere Department from November 2005 and to December 2009 at Washington DC. And for the third speaker, Mr. Stephen Schwartz. He is right now currently the head of Asia Pacific Sovereign at Fitch Rating in Hong Kong, based in Hong Kong since 2016. Previously, he spent 16 years at the IMF, and also IMF, including the Asia Department during the Asian financial crisis. And also, Stephen moved to Hong Kong in 2008, where he has served in senior research and analytical roles with Merrill Lynch and Moody's Investors Service prior to joining Fitch Rating. So we would like to please for the first opportunity to present for Professor Ari Kuncoro. The time is yours, Ari.
Thank you, Professor Budi. It is my pleasure to be present at the Samuel event. It is very important event. I like to talk with the help of my PowerPoint. I think we can go to the first slide. If we are talking about prospect, I think it is a tough business. Even under the normal condition, I think we have to use our judgment mostly to predict what will happen next year, 2 years from now. But right now, the problem become more complicated because we are in the pandemic. So it is not wrong if we call it. Now is the era of pandemic-driven economy. This reminds me of the old paper by Kitlan and Prescott titled "The Time Inconsistency." They both won the Nobel Prize in 2004. The paper basically said that policies that were optimal in the past may not be optimal today, and policies that are optimal now may not be optimal in the future. And this is very relevant to all government in the world. But I will be focusing to the government of Indonesia. I think in the very beginning of the pandemic, no government in the world prepared for that, including Indonesian government. That was in March 2020. right? At the time, what we were witnessing is actually the exchange rate appreciate from to 16,700, from around 14,000 within days. Yeah? And this is very the very situation feared by many people, because the Indonesian balance of payment, part of which actually consists of portfolio investment. So it's very vulnerable to the change of expectation, the sudden expectation reversal. So what the government in Indonesia did at the time? No policy in place yet. So what they did actually, they provide signaling. The first is actually the widening budget deficit. And at the time, there was a debate because in the law, it is stated that the maximum deficit is only 3% of GDP. But extraordinary time required extraordinary action. And within short time, they come up with a new law that actually provide some flexibility, yeah, at least at the time of pandemic. So this allow the budget to be more than the deficit to be more than 3%. At some point, it's close to 5 or 6%. And additionally, the another problem is actually the budget constraint problem. Who will finance the deficit? In the past, IMF came up with the solution. But in the year 2020, I think the Bank of Indonesia, the Indonesian Central Bank, actually declared that it will share the burden with the government. Okay? So this calmed the market. Yeah, we see that from the movement of exchange rate from 16,000, then back to 15,000, and right now is around 14,300. But that was not enough. People at that time were thinking about what about the real sector, because in order to mitigate the pandemic, it would require the government to restrict people mobility. That's actually contrary to the logic of the working of the market economy, where the demand side meet with the supply side. So what happened at the time is that the growth suddenly went to the negative zone, around 5%. Then the government also declared in order to maintain the demand side, particularly for those at the bottom of the income cohort, the income support for the needy, called bansos, bantuan sosial, and productive bansos, that is for the small business. And also credit restructuring from OJK for small business, as well as for medium scale business. That somewhat stabilized the situation. And then government working little by little to learn, to adapt to the new situation. Next slide, please. I will call it policy sequencing. Instead of using rule, the government choose to use more discretionary response according to health and the economic indicator. At the very beginning, the trade-off between economic and health indicator. If you try to mitigate the pandemic, the danger is that the economic sector too much. So the thinking actually evolved how to come up with the optimal lockdown. Isn't it not like in many country, is also not very loose. So the program called PPKM, PPKM, and also the government approach with signaling to guide public expectation. This is instead of using black and white, close or open, the PPKM actually spectrum. The level can be adjusted, and the content can also be adjusted. For example, the time in indoor dining, how many seats can be occupied in the plane, in the train, and everything similar like that. And also, government start to use data. It is instrumental that now finally we come to the evidence-based policy making. They monitor domestic and abroad, and they also look the economic indicator who have been in place for a long time, but rarely mentioned in the media, namely Consumer Confidence Index (IKK) and Purchasing Index from the manufacturing sector. How much time left? Okay.
3 minutes
then,
left.
3 minutes. 3 minutes, Pak.
Sorry, Pak Budi.
3 minutes left, Pak.
Okay, all right. And then in 2020, situation much improved, and we have another problem: how to contain the pent-up demand, because for so long the people have been constrained their movement in their house, and they are longing for outdoor activities, traveling, dining out, and we saw that in the Lebaran holiday, that government actually forbid the people to travel in the day of the Lebaran holiday. But what happened is actually people then travel. They choose to travel before and after the stated date, and it created a problem in July. At the time, the daily new COVID cases reached 54,000 something. This is actually good and bad news. The good news is that if properly managed, it actually can act as a tool for economic recovery. But if not careful, then it may the cause of the resurgence of the pandemic. So the measure of health precaution, like masker, social distancing, the limitation of the capacity of public transportation, and etc., may have to stay for considerable time in the future. Yeah, next. So what next? In 2021, government started to talk about normalization, unwinding COVID support measure, similar with the tapering in the US. I think the danger of inflation, if you have too much aggregate demand, and at the same time, the supply side, still in hibernation, reeling from the COVID pandemic. So the impact, like in the US, is inflation 6.4 something in the October, but Indonesia so far we don't have the picking up of inflation yet, not yet. Yeah? But we have to be careful looking at the consumer confidence index, purchasing managers index, exchange rate, and inflation, particularly at the product or sale level. So what we got in 2021? We have this has helped the government a lot, actually. The co-movement between health and economic indicator. This make the policy making less complicated because without having to think trade-off. So public might have internalized health and economic information, so it makes the government easier. But next slide, please. Next slide. But we have problem now. We have the emergence of Omicron. Yeah? create huge uncertainty. We see that the price of oil went down within days, yeah, and also government may force to tighten the PPKM, and the quarter three growth 3.51% is actually the result of PPKM in July, and this may be the lower bound of the growth for 2022. The upper bound, we are not sure yet. It depends on how the government reacts to the Omicron. Not overreact, not underreact. And another thing is G20 presidency. It can be used as confidence booster. It can provide assurance if the government try to normalize the economy by making the positive expectation and promoting Indonesia into the now still hibernating international supply chains. So the impact mostly on domestic middle class, and if we want to use the domestic demand, the middle class can be very instrumental, and it will give signal that the situation is improving. But again, here we talk about the uncertain future. We have Omicron, we have, I don't know how the virus may be evolving in the future. I'm not a health expert, but I think if we talk about the growth, we may not see the growth very close to 5%, probably until 2023. I think I will end my presentation. Thank you, Pak Budi.
Yes, thank you very much. Yeah, what valuable and also interesting input and also insight from our first speaker. To start our discussion, Pak Ari, let me start our question first before I give it to our participants. Regarding the pent-up demand that you mentioned in your presentation, what is your view on the rise of the inflation in overseas? And also,
tapi sebentar Pak Budi, boleh saya interupsi? Maaf, kita ada polling Pak. Ini ada polling dengan atindis.
Oke, silakan.
Silakan Bapak Ibu sekalian, the first question untuk polling kita kali ini. Menurut Bapak atau Ibu, berapa kemungkinan tingkat inflasi di akhir 2022 mendatang? What is your projection for Indonesia CPI inflation at the end of 2022? Silakan dipilih dulu Bapak Ibu sekalian. Oke. Oke, jawabannya sudah kita lihat. Oke, bergerak. Oke, cukup. Dari jawaban yang terlihat, kebanyakan dari para atendis kita melihat bahwa inflasi di tahun 2022 akan berada di antara 3-4%, mungkin lebih tinggi dari tahun ini. Silakan Pak Budi.
Okay, thank you. So let me continue our questions here. So regarding the pent-up demand, so and also the rise of inflation overseas, is there any threat for our inflation, Prof. Ari?
Yes, I think we have to have a close look at the inflation at the production level, wholesale impact of the global inflation on the global supply chains actually started to impact the Indonesia. If you look at the purchasing manager index, it fell down from 57 to 53 something, right? But it doesn't appear yet on the consumer price index. Year on year is still 1.66. And I think that because the Indonesian people actually now spend on leisure, not yet on durable good. Unlike in the industrial country, where they buy a laptop, they buy a new car, they buy everything, yeah, because the trend of working from home actually began to take place, yeah, in the industrial country, yeah, and that require your house to be very, very comfortable. But in Indonesia, people still like to travel to destination like Yogyakarta, yeah, probably Bali. And
yeah, so your forecast for next year inflation, how much?
Yeah, I think maybe close to 3%.
3%.
3%, but maybe not much to 4%. We may
so there isn't any threat of stagflation in our economy next year.
Not yet. I think in the last 5 years, I think the Indonesian people prefer to spend their money on leisure instead of the durable goods. That's good thing in terms of inflation. But I think the downside is that the growth may be less than we expect. Yeah, like in the US, they may be seeing the high growth and high inflation for the time. But in Indonesia, it's a little bit less inflation, but probably less growth. But I think that's fine. That's fine for us. I think we don't want to create too much shock to the economy because of the pent up demand. So we want to avoid the broken dam phenomena. So actually, the government has to act like an air traffic controller using PPKM, and then let the expectation work for the people. Yeah. So far, it's so good.
Yeah, good. Yeah, so it is almost similar to what our participants forecast. Yeah. Okay, one more question before I read the question from the participant. Is there any effect of the court order to revise our job creation law on the investors' confidence or consumer index? Prof. Ari?
Yes. I think we have the relative term. I think investor will compare country around the world. Which one is better? I think like in the class, we are not looking for those getting A grade. No, the C+ is okay as long as the other get D. So it is in relative term. I think the portfolio investment in the stock market, capital market will be driven by the relative expectation instead of the absolute number.
Okay, thank you. Maybe there's question from our participants.
Yes, Pak Ari. The first question from our participant is why our government do not do money printing for solve our pandemic problem, as well as our inflation still under control. Thank you, Pak.
Yes, I think the problem is that from capacity utilization, right? Because the Indonesian people like to spend on travel and something like that, and the capacity utilization is still low, like hotel, restaurant, then it may have some time before the inflation will take effect. So the producer will not raise price significantly. I think they only hoping that their capacity utilization will improve. But we don't know, after 2023, the inflation may be picking up. But it's good sign. I think the good sign probably at the time the economy have fully recovered. I think this we have to very pragmatic, right? Inflation is not that bad. Yeah, you will need inflation anyway. Yeah, what we don't want is excessive inflation.
Yes. Is there any other questions? One more.
Enough for maybe for the panel discussion.
Okay, I think I have still one more question.
Please, Pak.
To Pak Ari before Pak Ari maybe has to leave for another urgent meeting. Okay, Pak Ari, in the past, let's say in 2011, the surplus of our current account has made our currency appreciate to the best rate that we ever had in during that period, to 8,450 per US dollar. But now, after 10 years, our current account becomes surplus again, namely 1.5% of our GDP or $4.5 billion in Q3. But our rupiah is still valued around 14,300, 14,400. Yeah. So what is your view and also your forecast of our currency next year? Bali?
Yes, I think we have to look at we have the mini commodity cycle right now, from oil, coal, as well as palm oil, right? I think Indonesia has experiences a surplus in the trade account for 18 months continuously, right? And at the time, the situation in the portfolio investment, I think, like going back and forth, yeah. But basically, it can be balanced by the trade account. So we see what we see now is that it stabilizes around 14,300. But in the year 2022-23, as the growth picking up, the import will be picking up. Yes, probably the exchange rate will be closer to 14,700 something. That is not all bad. Biscuit is also improve competitiveness for export. Yeah, but what we don't know is how the pandemic actually affect the world. If the situation is similar like this, then Indonesia will benefit from the mini commodity cycle, right? At the same time, because the government actually still restrict the mobility, although not too much, the increase in import is also limited. So we have increase in export more than increase in import. That contribute to our trade account. That will stabilize the currency for 2021, probably in the first half in 2022, but for 2023, maybe different story.
So your forecast is the rupiah, our currency will depreciate instead of appreciate, yeah, amidst the surplus of our account in next year, yeah, Prof. Ari, yeah.
Yes, yes.
Yes, around 14,700. That is your number?
Yes, 14,500. Actually, the most difficult thing is actually to predict what will happen with the relative condition among countries. I think the portfolio investment will flow according to how good the country in managing the pandemic. Right? We never know that Singapore actually will have a problem. Indonesia experienced it in July, Malaysia, Indonesia, right? So the situation like being reversed right now, right? We used to be very isolated because people call us the hotspot. I think that is the title that we don't want, the hotspot. With 54. But right now we can say that, oh, wait a minute. I'm one of the best, according to Johns Hopkins University. One country that has managed the COVID-19 pandemic carefully and now come up with 3,000 new cases daily. That is actually a huge
yes,
difference between what we saw in July 2021.
Yeah. Okay, thank you very much for the presentation and also for sharing. Very valuable and insightful. Yeah,
thank you. Thank you, Pak Budi.
Yeah, thank you very much.
Yeah, thank you.
Yeah. Thank you, Pak Ari.
Thank you very much. So, Pak Ari, can you stay until the end of our discussion, or you have to leave?
I think I will darken my screen because I have another video conference, but yes. I will be a passive. I will be monitoring passively.
Okay, thank you. Yeah. Thank you, Prof. Ali. Okay, now, thank you very much for your presentation and also very insightful and enlightening. I think that we know about the forecast of our inflation and also our exchange rate. Yeah, for next year. Okay, now we can continue. We can move on to our second presenter, namely Mr. James. Yeah, Pak Jim, please. Yeah, time is yours.
Thank you very much. I also had a presentation that I think you can change the slides on. Sorry, is somebody? Is my can you put up my presentation?
Yes, but not yet the file.
Okay,
Yes,
that's
we already can see your file, your slide.
okay. So thank you very much for having me. It's always interesting to hear other views on the outlook in Indonesia, and this is an unusually complicated time, so it's particularly valuable to hear how people see things and how investors are viewing the market. So I'm very happy to be here, and I really appreciate this opportunity. If we could move to the next slide, please. I will try to talk quickly about 4 topics. First of all, how COVID affected the economy around the world, how we should think about the global recovery and economic recovery broadly, how did Indonesia respond to COVID, and what should be the next steps for Indonesia and the world. So first I'll talk about COVID and the recovery for the global economy. Next, please. So far what we see is that the economic rebound this year so far has been stronger in countries that have been able to vaccinate more of their populations. So you can see on the right that the darker blue countries are those that have been able to vaccinate a larger percentage of their populations. And these are largely the advanced economies, but also China and some Latin American economies. These economies tend to have rebounded much more quickly than places that have been slower to vaccinate, such as India, Russia, Indonesia, and most of Africa. So in some of the advanced economies, growth is already above trend of where it was before COVID, while in most of the emerging market economies, except for China, it's well below where it was before COVID. So we do hope that as vaccinations improve, that we'll begin to see growth in these other emerging economies rebound more quickly than it has so far. But at the moment, what we're seeing is a very rapid rebound in a lot of the advanced economies in China and a slower rebound in most of the emerging markets. So next slide, please. One consequence of that has been that inflation has risen very dramatically now in quite a few of the advanced economies. In the Euro area and in the US, there's been quite high inflation, enough to make central banks have to bring forward when they're actually beginning to tighten monetary policy. This has also pushed up commodity prices around the world, which, as Pak Ari said, has been very good for Indonesian exports, but it has been bad for inflation in much of the world. And also supply chain disruptions, which we hear quite a bit about, have really impacted inflation. So at the fund, we found that these supply chain disruptions have been much more pronounced in the advanced economies, especially the US, than they've been in many of the emerging market economies. So that is pushing up inflation in the advanced economies and less so here. But even the creation of that sort of inflation differential leads to some strains on the financial system, namely an expectation that the advanced economies may have to raise interest rates to control inflation at a time when many of the emerging markets are still operating relatively slowly and not yet fully out of the COVID slowdown that we've been in for so long. So the next slide, please. So just to talk about how this recovery would likely work at the global level. Next slide, please. So one concern would be that if the Fed begins to raise, especially if it takes markets by surprise, then we might see, we could see quite substantial dislocations in financial markets. So this happened back in 2013 when the Fed began to tighten monetary policy or announced its tapering of monetary policy and took the markets by surprise and led to quite a bit of financial volatility. So far, we don't see much evidence that this would be as bad as it was back in 2013. Most emerging markets are in a better position from the point of view of external debt and international reserves. And the Fed has been much more proactive about signaling changes in policy. And so far, it's bringing forward of the pace of tightening has been relatively well communicated. So we don't foresee the same kind of dislocations that happened in 2013, but it's definitely a possibility. On the right, I'm not sure what happened to my PowerPoint here because on my screen, it's showing countries and instead of cell ranges. So I apologize for the accidental mystery in that slide, but what it's showing is that in general, countries' debt to asset ratio of companies, so the leverage that companies have in a lot of emerging markets, these are emerging markets in Asia on this chart, it tends to be higher now than it was in 2012. So many companies are in a weaker position than they were in 2012, But as I said, we do believe that in general, country authorities at the national level do have more policy space to react to a potential dislocation in global financial markets. And again, that is not the baseline scenario that we foresee. We do expect that the Fed will tighten along the same lines that it has been communicating for the last few months, but there's always a possibility. So next slide, please. And the flip side of this difference in financial conditions around the world has been the strong record of growth recently in the advanced economies and in China, which has been very good for exports from emerging markets. So this has been sort of the silver lining to the cloud, so to the difficulty of the COVID recovery so far in a lot of emerging markets. So while domestic demand has remained relatively weak in many countries, including Indonesia, we have seen external demand be quite strong because of this demand from advanced economies. So this has meant that exports have been supporting Indonesian growth for the last few quarters, while imports have remained relatively weak. We do expect in Indonesia that as the economy begins to grow in the current quarter and then into next year, that imports will recover. So while in the short run, the current account deficit has really been quite low in Indonesia, we do expect somewhat of a widening next year. But for the time being, this has been a good source of growth and of strengthening reserve positions in a lot of emerging markets. And we just hope that imports will also recover as the economy does. So next, please. So then there's a question of how did Indonesia respond and how is Indonesia managing this return to the recovery and what do we see for the future? So I'll talk about 3 different policy areas and how the IMF sees the policy response of the Indonesian authorities in these areas, and then I'll talk about what some of the risks are going forward. So the next one, please. The first policy area has been monetary policy. Indonesia, like most emerging markets and advanced economies, has lowered interest rates, policy rates, quite dramatically over the COVID crisis. At the same time, the BI has also been very active in intervening, especially back in March 2020. It has been very active in intervening in FX markets and also buying government bonds, both in the secondary market and in the primary market. And the effect of a lot of these bond market purchases has been to push the interbank rate in Indonesia down to the lower end of the central bank's policy corridor. So even beyond the reduction in policy rates that the BI has engineered, there has been a loosening of monetary policy conditions, and there's a great deal of excess liquidity in the system right now. So this is good. Most central banks have been quite active in intervening to support financial markets, so the BI is no exception. The one concern we would have about that is that purchases of government bonds in primary markets have been quite substantial. So in 2020, these were very large. We thought they would be phased out in 2021, but there was an extension announced a few months ago. So as long as these primary market purchases are undertaken in a way that promises an eventual tapering, and there's a clear indication that they will eventually be phased out, that's a perfectly understandable response to a difficult situation, and one that won't have much of a long-term impact on credibility or inflation. The concern would be that if markets get used to this participation in the government bond market by the central bank, that the markets would become more dependent on this and begin to think that the BI has priorities other than inflation and stabilizing the exchange rate, and that could begin to compromise its effectiveness in those areas. So at the moment, the BI has said that these primary market purchases and the coordination agreement among the BI and the Ministry of Finance will be phased out next year, but it's important that that continues. So next, please. The other area where the Indonesian authorities have been quite active in trying to support the economy has been through financial supervision. So in quite a few countries, I think basically everywhere, financial regulatory authorities have encouraged flexibility in how supervisory rules are applied. And Indonesia has done this in a way that is quite orthodox, the kind of thing that many other countries, advanced economies, and a lot of the emerging markets have done. So rather, what they focused on is encouraging banks to restructure loans to creditworthy borrowers while still recognizing that there are credit risks in the economy. So what this has done is led to a large stock of loans in the financial system being restructured. It's now up to 20% or 25%, but that has not totally been reflected in NPLs yet. So many of these loans that have been restructured will be paid off. Some of them will not be. And with this policy as it's currently designed, it will expire in March 2023. And what we want to have happen is that the banks even now are thinking about where their capital positions will be in March 2023, and that the OJK is encouraging them to recognize credit risks when they arrive and to make a good determination of which borrowers are creditworthy and which are not, so that as this deadline comes closer, the banks will have already recognized which loans are going to cause problems, they will have provisioned against them, and then we can move on. So in all likelihood, it will be, the stock of loans that eventually move from these restructured category into non-performing. It's not going to be zero, but it's not going to be 100%. So the question is, how good a job have the banks done at provisioning for this? And the banks are quite well capitalized in Indonesia, and they have been quite active about provisioning against these loans. So at the moment, it looks like there will be sufficient coverage, but you never know sometimes until it's too late, what the issue could be. But so far, this policy is being handled quite well, and it does seem like the banks are sufficiently well capitalized to be able to go into 2023 with quite a strong credit position that will allow them to underwrite the recovery. So the next slide, please. The third area of policy response has been the fiscal response. So Indonesia, like again, every other country in the world, widened its fiscal deficit quite substantially in 2020, and that deficit is beginning to come down now in 2021. So on the reasons for why the deficit rose, part of this is weakness in taxes as the economy slowed down. That's perfectly understandable and reasonable. And part of it was an expansion of social spending and other forms of crisis support that the government engaged in. So in general, these packages that we feel were quite well designed. They focused on the right areas, namely health and social protection, small and medium-sized companies. These are the kind of areas that you want to focus on if you're trying to smooth social indicators through the crisis and make sure that the crisis isn't unduly hurting people. So that was quite well designed. One concern about that is that some of the implementation of the National Recovery Program has been quite weak at the local levels. So a lot of money that was intended to be spent in these social areas in the end was not spent. So that's a concern going forward, that improving the efficiency of spending should be a priority. And I think that is part of the new law that was just passed on central and local government relations. And then another important aspect of this deficit response has been the need to get the deficit back toward the target that the government aims at, which is 3% of GDP. So the government has talked about getting the deficit to that 3% target in 2023. It looks like they will be on target to do that, partly because this year the deficit will be smaller than forecast, and that is partly because of this lack of expenditure under the recovery program. So at the moment, it does seem like this 2023 target is realistic. They will get back to 3%. We would prefer that convergence is done primarily through more efficient tax collections. And an important step in that was this tax harmonization law. But some of it will also come from unwinding the National Recovery Program. But we would hope that over time, taxes can be broadened in a way that brings in enough revenue to achieve those social goals and increase spending in social areas while maintaining that 3% deficit target. So that's the fiscal policy response. So next slide, please. So just in terms of the risks going forward, I mentioned before that there is credit risk building up at the banks, and we don't know how large it is. So that will be an issue in 2022 and 2023. At the moment, it seems like the banks are sufficiently well capitalized, but as Warren Buffett once said, you never know who is swimming without a bathing suit until the water goes out. So we won't know how bad the banks' balance sheets are until for another year or so. But that just means that we need to have intrusive supervision. Banks need to be active about risk management. And then the last slide, please. And then just to reiterate how the fund thinks that the policy priorities should be over the next year or so, we do believe that fiscal consolidation is key on the government side to get the deficit back to that 3% target. Ideally, that would also allow for more infrastructure spending and social spending. And carbon pricing should be an important part of this. It's worthy of note that Indonesia has now passed a carbon tax. More countries are moving in this direction, but obviously we need all countries to move in this direction. And one thing I would cite about this is that the Swedes, when they passed their carbon tax, they set it at a sufficiently high level that it generated a significant amount of revenue for the budget. And this is an important way to think about carbon taxation. Not only can it be an important source of revenue for the government, but once it has become an important source of revenue, it's very hard to cut it. So you have achieved an important policy goal and a social goal by leaning against global warming at the same time while you're raising money and generating something that is more politically sustainable. So we would encourage that as tax reforms are thought of in the future, to focus more on taxing carbon and maybe less on some of the other areas such as income or corporate income, or well, however we want to design that. Then it's important to be vigilant about inflation, including as US inflation is high, there could be potential spillovers. Part of this means that the BI should phase out these purchases of government debt. And finally, structural reforms should be ongoing to try to make the Indonesian economy more attractive to FDI. This will be particularly important in renewable energy, where there is a lot of money looking for new projects, but a lot of it doesn't come into Indonesia because the difficulty of selling renewably generated electricity in Indonesia. So that's the kind of reform that could really help build competitiveness, lean against climate change, and create jobs in Indonesia. And again, the issue of credit risk and restructured loans. So those are the main policy reform areas that we see in Indonesia right now, and how to bring the economy back to a stronger position than it was even before COVID. So the last slide, please. So thanks very much for letting me speak today, and I'm happy to answer any questions.
Yes, thank you very much for great presentation, very insightful, I think, James. So before we read the question from the participant, let me start by asking you two questions related to your presentation about our economy for next year. So in your view, what do you think of the, buying of the primary securities of the government by the central bank? Because we notice that at the same time, the monetary policy take place at the same time with the fiscal policy. Is there any issue that we should be aware of this, coordination of this policy? What is your view on this? Okay.
So the issue with, just to start from the basics of it, government deficits rise during difficult times like this. So somebody has to buy the bonds. And in some countries, there will be a large insurance industry, or there will be regulations on banks that require them to buy these bonds. Indonesia doesn't have either of those, so it has traditionally been dependent on foreign investors. So when the crisis began, the foreign investors left the market, as they did in many emerging markets back in March of 2020. So there was a large stock that was going to be coming on the market that had to be bought by someone. So the Ministry of Finance faces a difficult choice in such cases. They can either continue to depend on foreign investors, but that would require higher interest rates to compensate them for a higher risk environment, or they can try to use the financial system to absorb more money, more of these bonds domestically. But in that case, you're reducing the space on banks' balance sheets to lend to support the economy. So the decision that was made was for the BI to step in and temporarily take some of this pressure off of the markets by replacing foreign investors and buying these bonds. So this kind of, Governor Perry originally started calling this quantitative easing, as was done in some of the advanced economies. These kind of purchases of government debt, the risk behind them is first that they are distorting the overall prices, and second, that they are compromising the ability of the central bank to control inflation. So the BI has tried to buy these bonds in such a way that minimizes the distortion to overall prices in the bond market. But you can only buy large amounts of debt for so long before you do begin to obscure those signals. So that is a concern. And on the other side, the time frame for these purchases of debt has to be limited. If there's a perception that the BI is the first buyer of government debt rather than the last buyer of government debt, then people will begin to think that the inflation goal is subordinated to the goal of making sure that the government budget deficit is financed. I don't think that that is what is happening in Indonesia, but the longer that this buying continues, that could become a risk. So that would be the concern. At the moment, the BI has said that it will phase out these purchases by the end of 2022. It would be good if they phased them out earlier, because that would show that this policy is temporary and time limited. And the fact that the deficit is smaller this year than it was than we were forecasting does raise the question of why they wouldn't just phase this program out earlier and give the markets more of a role. But so it should be phased out, and that is the plan that the BI has at the moment.
Yeah, there is good news there that it will be phased out soon, maybe sometime next year. Okay, one more question from me before we read the question from the participant. What is your forecast of our economic growth and exchange rate for 2022 next year?
We don't do a forecast of the exchange rate. So the fund's general policy is that we don't forecast exchange rates going forward. So,
yeah, how about economic growth then?
We think economic growth next year will be about 5.9%.
5.9% for Indonesia next year?
Yes.
Okay, that's good. Yeah, close to 6%. Okay, now please read the question from the participants.
Mr. James, there is a question from Abdullah Emir and Andri Christian. The question is, what is your advice to Indonesia government and investor to prepare for 2022 uncertainties?
My advice for investors,
government and investor.
If I were an investment advisor, I wouldn't have to work at the IMF anymore. But I guess I would say diversify and recognize that you never know exactly what's going to happen here. And the big concerns that we would have would be related to sustained inflation in the US or uncertainty related to China. So bearing in mind that there could be dislocations related to another increase in COVID cases or spillovers in risk aversion related to what's happening in China or a sudden increase in US interest rates, those would be the risks that I would worry about. But if I knew how to hedge against those risks, I would be living in Dubai.
Okay, thank you.
One more question, Mr. James. This is from Riva. And the question is, do you see the commodity boom will stay over 2022? And what is your pro and contra for Indonesia economy as the impact of the commodity booms?
So we do think that global growth will remain pretty sustained in 2022, but I don't think we're forecasting that there will be a continued increase in prices over time. We tend to assume that commodity prices will return to trend levels over the medium term. So again, we're not buying commodities short or trying to invest in things. So I think we just assume that as the global economy gets closer to trend, some of the advanced economies will begin to slow down next year after this boom this year, and some of the emerging markets will get closer to where they would have been without COVID. And with that in mind, we would expect commodity prices to remain strong, but hopefully not at the same very high levels that we see right now. So how do I see this for Indonesia? I suppose the main impact has been that this has been very good for tax revenue this year and also for exports, though it's worth noting that exports have been strong on the manufactured side, not just on the commodity side. So as commodity prices stay strong, that should mean that it's able to continue to support revenue and the trade balance next year. I think that would be the main advantage that we would see. Hopefully that money can, on the fiscal side, can be used to bring the deficit closer to target, and on the trade balance side, it can make sure that there's continued investment in Indonesia, not just in commodities, but maybe in moving some of these industries toward higher value added.
Yeah, still have two more questions. Actually, there are a lot of questions, but later we postpone maybe at the end of our discussion. Let me ask you two more questions. First is, from your perspective, what is the downward and upward factor for Indonesia's economy to recover? For the full recovery, before pandemic, yeah.
So the main downside risk that we would see, there are two. The first is that there could be another outbreak of COVID. If we see another large increase in cases like we saw with the Delta variant in the middle of the year, that would be a significant downside risk. The economy was only beginning to recover last May before cases began to rise with Delta, and PPKMs were strengthened across the country, and we had to postpone this recovery. So that's the single biggest risk that we would see. After that, I think the main concern would be about the level of inflation and the pace of monetary tightening in the US, and whether there will be a dislocation related to that. So our baseline would be that the Fed can gradually shift the US economy toward higher interest rates and lower inflation. But if it winds up surprising the markets by having to do this at a more rapid pace than we are currently estimating, or that we forecast in 6 months or so, that could lead to financial volatility and a shift in risk aversion that could lead to capital outflows here and higher rates. So that would be the second risk. But again, these are risks, not the baseline.
So is our economy, Indonesian economy, still sensitive, vulnerable to the tapering in the US?
I mean, it's a global market, so
Still
investors will
sensitive,
make decisions, and global investors will make decisions based on how they see risk around the world. So if rates begin to rise in the US and there's a perception that there's more volatility in financial markets, Indonesian assets, for better or worse, are seen as somewhat riskier, so that could lead to higher interest rates here. I mean, the BI has tools to deal with this. There's plenty of liquidity in the financial system right now, and the BI probably has some space to raise rates before there's a real constraint on lending in Indonesia. But ideally, you would want to see a smooth transition toward higher rates and stronger growth.
So your forecast of our BI rate for next year, it will be raised for how? Yeah,
we don't forecast interest rates either.
We are expecting. Okay, sorry. So again, my last question for your time before we also read the questions at the end of our discussion is, our country is now in the middle income country. So my question is, how soon can we get promoted to high income? And also, following this question is actually which country model should we follow? Whether South Korea or Chile or maybe any other country that because we have limited knowledge about this. What I know is, I think it is close to, or it is more feasible to follow the model of becoming a high-income country of Chile. But maybe you have your own perspective on this.
Well, I think the standard IMF answer
5 or 10 years or 15 years, just your forecast. Is it just, and also which country model, that our country can adopt or can follow or imitate?
The standard IMF answer here would be that I should say you should follow the Indonesian model, and that every country is different. But since you mentioned Chile, and I worked on Chile for a long time, and I've spent a lot of time there, I think there are two things that are relevant about the Chilean model. The first one is that Chile was largely a natural resources exporter, and they put a lot of effort into trying to add value to their exports. And that's very challenging to do. And that's something that Indonesia is trying to do with its own natural resource exports. But what the Chileans often found was that the cost of adding value to manufactured exports, particularly minerals, can be so high that it's cheaper to just shift this stuff all the way across the Pacific to Asia. It's a very difficult set of industrial policies to try to add value to manufactured exports. The Chileans have been able to do this with some agricultural exports and fish, but it's been much harder with minerals. So that's one thing, is that it's a natural tendency to try to focus on how to add value to natural resources exports, but it's really not very easy to do. And the second thing I would point out is that when I worked on Chile, growth was very high. They were expecting to be an advanced income country in the next 10 or 20 years. And there were maybe 7 or 8 EU countries that had lower GDP per capita than Chile. But in the last 5 or 6 years, almost all of those EU countries have passed Chile in GDP per capita. And there's been a great deal of political uncertainty. And part of this is because there was a real perception in Chile that growth was insufficiently inclusive. And that is something that all countries need to bear in mind. It's certainly something we see in a lot of other countries around the world, that when there's a perception that growth is not including everybody, it leads not only to dissatisfaction, but it can also lead to the kind of political difficulties that make it harder for governments to bring about stronger growth. So focusing on inclusiveness might seem like something that raises taxes or reduces efficiency in the short run, but in the long run, it leads to a more sustainable growth model and a greater willingness among people to reform in such a way that brings about higher growth. And I think that's really the main lesson of what's happened since you mentioned Chile, of what's happened in Chile in the last 5 or 10 years.
So it's still, yeah, you mean it's still a long way for our country to become developed or high income country?
I mean, it takes a long time. I mean, even in China, where they've had such rapid growth for a generation or two generations now, there are still parts of China that are very poor. It's not all Shanghai.
Yeah. Okay. Thank you very much. Yeah, for your insight and also all your answers to our questions. Okay.
Pak Budi, pardon me.
Yeah.
Before we move to next panelist, Mr. Stephen, we have two questions for the attendees. The second question and for this polling is, menurut Bapak Ibu, berapa target pertumbuhan ekonomi Indonesia di 2022 mendatang? What is your projection for Indonesia economic growth in 2022? Silakan dijawab Bapak Ibu. Please answer. Oke, mungkin kita sudah lihat. Oke, silakan. Oke. Terima kasih atas jawabannya Bapak dan Ibu. Pada saat ini kayaknya banyak yang milih 5-6% Pak Budi. Jadi kayaknya attendees kita lebih positif melihat 2022 mendatang. And the third question is, menurut Bapak dan Ibu, berapa rentang nilai tukar rupiah terhadap USD di akhir 2022 mendatang? What is your projection for rupiah exchange rate IDR USD at the end of 2022? Silakan dijawab untuk pertanyaan ketiga Bapak dan Ibu, polling ketiga. Oke. Polling ketiga, silakan. Sudah? Jawabannya di 13.500 sampai 14.000 ya. Jadi kayaknya banyak yang optimis nih kayaknya Pak Budi.
Berbeda dengan yang prediksi Prof. Ari tadi. Iya. 14.500, 14.700. Kalau yang inflasi, apa tadi yang terakhir? Economic growth sama.
Economic growth
5,9 soal dari ya.
Oke, terima kasih atas kesediaannya mengisi polling. Silakan dilanjut.
Okay, now we can continue to our third speaker, ya. Stephen Walsh from Schwartz from Fitch rating. Yeah, this is the biodata, the curriculum video of Stephen Schwartz. So now I give the time to you, Mr. Steve. Yeah, time is 10 to 15 minutes. Yeah, at the maximum, I think. The time is yours.
Yep, thank you very much. Terima kasih, and thank you to my friends at Samuel Securitas for inviting me. It's a pleasure to be with you. As my CV says, I was based in Jakarta back in 2004 to 2008. I had Jim Walsh's position back then, and it's interesting to see how the IMF position has evolved over the years. When I was there, the IMF wasn't so popular. Jim, you have a much easier time of it, and I was very pleased to see a few years ago that Indonesia hosted the IMF and World Bank meetings in Bali, which I attended. It's been frustrating not to be back in Indonesia with you all because of the travel restrictions. I'm speaking to you today from Hong Kong, where we still have quite onerous travel restrictions that are preventing us from moving about the region. On the other hand, the conditions are quite safe here with respect to COVID, so local conditions are quite robust going out, and we all wear masks, but it's more relaxed than elsewhere. Could you please bring up my presentation? I would like in my 10 minutes or so to speak a little bit about the global and regional economies, and then end with some remarks on Indonesia. Before I get into it, just a couple of themes that strike me. We're all putting out our 2022 outlooks, and I'm struck as I read our own, which is pretty upbeat, and others, that there's quite a divergence in the market about what to expect next year for the global economy, for commodity prices, interest rates, and especially for emerging markets. And it's a degree of a range of forecasts that's quite wide, unusually wide. And I think it reflects the competing influences of virus risks, expectations of global monetary tightening on the one hand, against domestic demand coming forth with the relaxation of mobility restrictions. So it's a bit of a tug of war, which of these is going to dominate. We're, as I said, reasonably optimistic about the outlook. The second theme I would notice, speaking about Indonesia, as I talk to investors across the Asia Pacific region, and indeed across the world, I'm really struck by the degree of optimism that global investors have right now toward Indonesia. Even though there are a lot of risks, I do detect quite a lot of optimism among investors. Okay, if I could go now to the first slide, please, which speaks to some of the themes that we see for the global outlook. I think we've moved ahead. That's the fourth slide. Can we go back to the second slide? If not, I can just start here. Well, there's a missing slide, it seems, but that's okay. I can start right here. So this shows our own global forecasts for the world economy. As you can see, we're expecting very strong growth for this year, of course, 5.7% in the world economy, which is the strongest growth since the early 1970s. So it is indeed a very strong rebound. We expect that to slow a little bit next year, but part of that is due to the base effects from this year. I'd like to highlight that we do see quite a significant slowdown in China, slowing from 8% this year to just 4.8% next year. And I'll speak more about that in a moment. It's due to policies in the property sector, principally to prevent financial excesses. We expect at Fitch only one interest rate hike by the Fed next year. And we expect that in September. So we think the Fed will finish its tapering between March and June, and then begin raising interest rates in September. Many in the market, we're aware, are penciling in 2 or even 3 rate hikes by the Fed. This is the kind of degree of divergence that I talked about in expectations for the outlook in 2022. Next slide, please. So let me just speak to some of these themes. The first is this dramatic slowdown that we're seeing in China. And the interesting thing is that we believe it's primarily policy induced. It's not really an external shock or the virus shock, but it's a deliberate slowdown centered around the property sector, which is a big driver of growth in China. And with the decline in the property sector, we're seeing broader investment and retail sales and the like also coming down with it. Now, we do expect policies to begin loosening up in China, which, Jim, I know is the IMF's advice that it's given to the authorities in China. We just saw announced another RRR cut, the required reserve ratio, and we're expecting more of that in 2022, along with further fiscal stimulus. And we think China will probably cut interest rates around March next year. Next slide, please. The second theme that the speakers have already highlighted is the very strong external demand, particularly the demand for durable goods in the US and to some extent in Europe. This has really fueled a tremendous rebound in global trade and has been a big tailwind to many emerging markets, including Indonesia. So 2021 was a year of relatively weak domestic demand in Indonesia because of the mobility restrictions, but it was offset by strong export demand that was driven by the strong cycle, particularly of US import demand. Next slide, please. The third theme is the vaccine rollout. And on the left-hand side, you can see that blue line, how Indonesia compares to some of the advanced economies in the region and globally. And the good news is that the vaccine rollout has gathered pace, as you know, in Indonesia. But Indonesia still lags other countries, some of its peers in the region. So there's still room to go on the vaccine rollout, but it's led to a dramatic improvement globally in mobility indicators. In some cases, mobility has even surpassed pre-pandemic levels, as you can see on the right-hand side. Next slide, please. Now, the global demand for imports and goods has led to a dramatic shortage, supply chain disruptions, shortages of goods, and this is principally what's driving inflation in the US and elsewhere. So you can see just how high US inflation is now in the US at over 6%. You've got to go back all the way to 1990 to see inflation that high in the US. And this is now worrying central banks. Initially, they were saying this was transitory, but the scale of inflation and evidence that it's broadening out to expectations and wages is increasingly a concern, which is why we're expecting the Fed may well accelerate its tapering. But we still think the Fed will be rather cautious when it comes to outright interest rate hikes because of uncertainties to the growth outlook in the US and elsewhere. Next slide, please. The fifth theme is, what is all of the monetary tightening we just talked about going to do to global financial markets? I think Jim spoke about this. You never really know until the interest rate hikes start how investors are going to react. But if you look at the left-hand side, this is the price earnings ratio in the US stock market. And you can see that we're reaching very lofty levels in terms of price earnings ratios, which has been good for investors in the US stock market or equity markets in general, but it means markets may be vulnerable once interest rates start to rise. So you can see on the right-hand side just how low 10-year Treasury yields are. If those start to back up, or if short-term rates start to back up, we could see a great deal of market volatility, and the US stock market could have a way to fall. Next slide, please. Now, this just shows our Asia Pacific sovereign ratings. That's what I do at Fitch. I'm in charge of the sovereign ratings. And you can see across the region, we have a very wide range of ratings from AAA in Australia and Singapore, all the way down to the C range in some of our frontier markets like Sri Lanka and Laos. Indonesia's sovereign rating for us at Fitch is at BBB, right in the middle of the pack there. It's on stable outlook. We've had a number of negative rating actions globally, but we have not had to lower Indonesia's rating during this pandemic because of the financial buffers that it has, which I'll speak about in just a moment. Next slide, please. So speaking of Indonesia, you can see on the left-hand side just how dramatic the spike was in the third quarter with respect to COVID cases, but they've come down dramatically. And with that, mobility is now way up, which bodes well for the growth outlook. We're expecting growth of 3.5% this year And we're somewhat above the consensus next year. We think we'll see a rebound of 6.5% to Indonesia's growth next year, as it makes up for some of the lost output last year and as domestic demand really recovers. Next slide, please. This slide, and I think the audience had some questions about fiscal space in Indonesia. You can see on the left-hand side that Indonesia did provide fiscal support during the pandemic, as Jim alluded to. How does it compare to other countries? It's sizable, but it's not as large as some of the other countries globally, Thailand, Japan, Australia, or even the global average of fiscal support. But we have seen a sizable increase in public debt in Indonesia, almost 15 percentage points as a result of this fiscal spending and the contraction in GDP that we saw last year. On the right-hand side, the good news for Indonesia is its public debt ratio is very low compared to other countries and compared to the BBB median. So we think that that means Indonesia does have fiscal headroom, and it's one of the key reasons we have not had to take any negative action on Indonesia. It entered this crisis with a low public debt ratio, and we're expecting the debt ratio around 43% of GDP, which is some 10 percentage points lower than the BBB median and far, far lower than Malaysia or India, which you can see on the right-hand side. Next slide, please. Jim spoke a lot about Bank Indonesia's assistance in financing the deficit. This is something that certainly helped to keep interest costs down for the government and to provide some headroom on the fiscal side, but it is uncharted water. It's very unusual for an emerging market central bank to engage in the primary market for debt securities and the burden sharing arrangement. So we acknowledge that it's helped for the financing, but it will be a big challenge to unwind this in the coming years, as Jim said. I don't need to repeat what Jim said, but it's something that we're flagging as a risk factor. Bank Indonesia has built up a lot of credibility with investors over the last 2 decades, and if it's unable or it meets challenges in unwinding that, could this undermine some of the strong credibility that it's built up with its inflation fighting credentials and the independence of the central bank? Next slide, please. Now, we spoke about taper tantrum of 2013. We're not expecting quite that kind of volatility for Indonesia, and it's due to the external buffers that Indonesia enjoys. On the right-hand side, you can see there's been a continued steady increase in foreign exchange reserves, and the current account position in Indonesia is much stronger than it was back in 2013. So we think these factors should help insulate Indonesia from a repeat of a taper tantrum, but we would expect some financial market volatility as interest rates in the US begin to rise. Next slide, please. Let me just finish by commenting on what we see as the key rating sensitivities for Indonesia. You know, what would it take for us, say, to downgrade Indonesia? And I've listed 3 items we highlight. One is an increase in the public debt burden. You can see this on the right-hand side. The second would be a weakening of the macro policy framework. I spoke about the credibility that Bank Indonesia has built up and the risks that it might face in unwinding some of its assistance. And lastly would be a decline in the foreign exchange buffers. But on the positive side, what we'd be looking for on the left-hand side would be reductions in external vulnerability, particularly if Indonesia can exceed in generating more manufacturing and diversifying its exports away from commodities. The revenue ratio in Indonesia is extraordinarily low, and maybe that's one of the reasons Bank Indonesia has stepped in, besides having to take up demand for bonds that foreign holders aren't buying. It may reflect that the revenue ratio of the central government is just so low it can't bear to see a big increase in interest costs. And lastly would be improved structural indicators. We use the World Bank governance indicators, and by that measure, Indonesia is on the weak side compared to some of its peers. So things like political stability, further enhancements to transparency, and the fight against corruption could go a long way to improving Indonesia's rating. I'll stop there and look forward to some discussion. Thank you.
Yes, thank you very much for a very good and enlightening presentation, Steve. So before we start our discussion, to read the question from the participant, let me ask you two questions first. So if we notice the data of our economic fundamentals currently Indonesian economy, then we see that we have another current account surplus, let's say after 10 years in the third quarter this year. And also the FDI is also not bad, 4.5 billion incoming, our net inflow. And portfolio investment as well, $1.5 billion in the last quarter. And also we see that the foreign exchange reserve, we have well, we can say big and stony right now, one of the highest in record, and also improving and stronger government revenue due to the high prices of coal and CPO, and also the tax harmonization law will be implemented next year. And not to mention is the the low risk of the pandemic. According to CDC, only level 1, one of the best in Asian, or not one of the best, is the best because there is no level 2 country, but the other Asian countries are in the level 3 or 4. So is there any possibility? Is there any likelihood that the Indonesian sovereign rating would be upgraded next year or in the near future? In the near future. And if what is your view on this?
Well, let me break that into two parts. Firstly, with respect to the economic outlook, the factors you mentioned are all reasons why we're optimistic about Indonesia's economy in 2022. As I mentioned, we're expecting 6.5% growth. For many of the reasons you just mentioned. We think domestic demand in particular was held back last year because of all of the outbreak of COVID and the mobility restrictions. Now we're worried about new variants like Omicron and a resurgence once again even of Delta. Indonesia's vaccine rate is way up, as I mentioned, but it still lags behind some others. So that's all positive for the economic outlook. When it comes to the rating, remember that our ratings are relative rankings. So some of these positive developments are happening in other countries too. And we have a stable outlook at BBB on Indonesia's sovereign rating. That stable outlook is the likely direction of the rating over roughly a 2-year horizon. So we do not expect an upgrade as early as a year from now in Indonesia. Some of the key vulnerabilities are the external vulnerabilities that Jim spoke about, the high reliance on foreign portfolio flows, and also some of those structural indicators that lag other countries. So it'll take more time if Indonesia keeps improving on those to see an upgrade.
Okay, so not next year, but in the coming 2 years, specific. And also you have mentioned all the steps, or the factors that can upgrade our rating. I think that's enough for me. Maybe from the participant.
Okay, thank you, Pak Budi. This question from Lini Karuni. The question is, in your opinion, how negative the delay of the job creation law will impact to Indonesia credit rating?
We were quite positive on the omnibus law when it passed because it addresses many long-standing problems that hinder investment in Indonesia that date back to my days in Jakarta with the IMF, the labor market rigidities and some of the problems to attracting more foreign direct investment. We believe that this omnibus law really helps to address those. But we always say in Indonesia, you know, it all depends on implementation. Many times laws are on the books, but they don't get implemented because of implementing regulations or regional problems in implementing it. And so this court ruling concerns us. It's a potential challenge for implementing this law. I don't think we have great insight on how meaningful it will be. We're going to have to wait and see. But in the meantime, it is encouraging that, as I said, investors hold a positive view on Indonesia. We don't think this Supreme Court ruling will move the needle on the rating quite yet, but it's something we're going to have to watch and see how it develops over the next year or two.
One more question?
Maybe we move to the panel discussion.
Okay. No, I still have one or two more questions. So, in your perspective, Steve, what is the biggest challenge for our economy? And is there any impact if, you know, the Chinese growth gets lower?
So in terms of the near-term macro outlook, I think the slowdown in China is something maybe that doesn't get enough attention, because if that slowdown continues as we expect through the first half of the year, it could start to drag down commodity prices, which have been a big boost for Indonesia. One of the other challenges, you know, is really in attracting investment that has, you know, gone to other ASEAN economies like Malaysia and Vietnam. I think it's the recent FDI trends are encouraging for Indonesia. And it would really be good to see manufacturing continue to grow. I think these are, you know, during my days in Indonesia, something that was really lagging was the dominance of commodities at the expense of manufacturing. So that's still a challenge, but there's some positive trends.
One more. Recently, our government issued green bond. So, what is your perspective of the trend of the green bonds in Indonesia and also worldwide?
Yeah, the green bonds are of a huge interest nowadays to investors, and we at Fitch have very much stepped up our so-called ESG scoring and assessments. We have a new unit called Sustainable Fitch that does just that. So I think it is an encouraging trend, and I think the green bonds in Indonesia have been very well received by investors, and we're seeing across the region. Here in Hong Kong, the government has also recently issued green bonds, which were very favorably received. So this is a strong investor demand and definitely a good direction for the government to go.
Thank you for all the answers. Very favorable for us to hear your sharing your input as well. Okay, now we can open other questions.
One question for Mr. James and also Mr. Stephen come from Andri. What is your opinion with Indonesian fundamental, especially as the consumer change in Indonesia and also the impact for supply chain crunch and also the imported inflation in Indonesia in 2022. Please, probably.
Yeah, so
James or Stephen.
This is addressed to
James and
Stephen.
Stephen.
Yeah, okay, we can start from Steve first. Yeah, Stephen.
Okay, I was gonna let James have a shot because I've been talking a lot.
Okay.
James, why don't you go first? You go first.
Yeah, Jim first. Okay, after Jim, then Steve. Yeah, Steve.
Sorry, there were two parts to the question, right? The second one was, what is the outlook for inflation in 2022? But what was the first part?
The consumer change in Indonesia, and would it lead to the supply chain crunch maybe in 2022?
So the supply chain crunch that we see around the world, as I said in my presentation, so far it's been more of an issue in advanced economies than in emerging markets. So the main driver of this has been a shift in consumer preferences in a lot of the advanced economies toward goods and away from services. So fewer Americans and Europeans are going out and having they're engaging in fewer services like movies or going to restaurants or going to hotels or traveling, and instead they're buying more goods. But I have to say, having been in the US in October, it's hard for me to believe that people are traveling less than they were before. I mean, it's everything is packed, but it's apparently that's the case according to the numbers. Certainly business travel is down. But because of this additional demand for goods, much of which is imported, the price of exporting goods from China, especially to the West Coast of the US, has risen. And that has had a knock-on increase in shipping costs around the world because more ships have been diverted, even including domestic Indonesian freight has been shifted toward this trans-Pacific market to bring goods to the United States. So global shipping costs have risen, though it does look like, my impression is they have now peaked and they're beginning to fall, but there certainly was a big increase in that. However, on top of that, there have been blockages domestically in Europe and the United States for transporting goods even domestically. So that has pushed up the cost even more. And that has not had an effect on the rest of the world. That's purely an issue of just crowded roads or the difficulty of finding drivers in places like the UK and the US, and also just crowded ports in places like Los Angeles. So that there are domestic factors to this that are specific to the US and Europe that have pushed up the cost of goods. But there are also global factors behind it. So when we look at somewhere like Indonesia, that shift in consumer preferences hasn't been as pronounced here as it was in the advanced economies. So we haven't seen the same additional pressure on domestic distribution networks, or at least that is my understanding, as we've seen in some of the advanced economies. But there is this global factor of a higher cost of transporting goods across the water. So that will push up goods in Indonesia, push up the price of goods in Indonesia, even though we won't see the same kind of domestic factors. And to the extent that how that affects the inflation outlook for next year, it's our understanding that these bottlenecks are beginning to be sorted out at a global level, and that they probably, we expect that these global shipping costs will begin to decline in 2022. And so we won't see the same kind of impact on inflation that we've seen this year. And even if shipping capacity were not to increase, at least we don't see prices rising any higher. As I said, I think they've already begun to peak. For Indonesia, the two factors that in our view would drive inflation for next year are how quickly domestic demand returns and administered fuel prices. So demand has been quite weak in Indonesia for the last year, and that's one reason why inflation has been so low. I think we'll see when the Q4 data come out how quickly domestic demand is reviving here. In other emerging markets like Brazil and India, we did see credit revive very quickly when domestic demand recovered. And if that occurs, then we may see price pressures begin to emerge in 2022. I think that's also how the BI is seeing things. But the main risk factor in my view would be fuel prices. So while the main reason why Indonesia's inflation has been low is because demand has been weak, it is also true that in a lot of the emerging markets where inflation has gone up to higher levels, so Russia, Turkey, Brazil, part of that has come from fuel prices, which are market determined. In Indonesia, these prices are administered and they remain below global market levels. Eventually, they will have to catch up to market levels, and that will put some upward pressure on inflation in Indonesia. So when that happens is anybody's guess. That's a policy decision. But ideally, you wouldn't want it to happen at a time when inflation is already high. So one concern that I think will come up at some point next year is that these administered prices for LPG, for diesel, for gasoline, they will have to rise, and we wouldn't want them to rise at a time. It'll be difficult to raise them at a time when inflation pressures are already building because the economy is growing. So that would be the risk to inflation that I see.
Inflation, okay. Now from Steve.
Yeah, I don't have too much to add. I think we would agree with the IMF's assessment of the global outlook for supply chain disruptions. We do expect them to gradually ease during the coming year. But they are, and Asia in general has been somewhat insulated from the worst of these supply chain disruptions. We've seen Japan and Korea hit hardest because of their auto manufacturing and export sector, the shortages that have developed in semiconductors, for example. So Indonesia has been fortunate in having not been directly affected. The impact is more indirect. Supply chain disruptions are a key factor behind the higher global inflation rates, which could bring earlier monetary tightening in the US, and that could have the knock-on effects to sentiment and raise the challenges for Bank Indonesia in the coming year as global interest rates rise.
Okay, thank you.
The next question comes from Darmawan, addressing to both of you, Mr. Stephen and also Mr. James. What is your opinion with huge population in Indonesia? And would it be lead to dividend or maybe disaster for Indonesia economics ahead?
So it is about demographic dividend. Yeah, what is your view? Yeah. So now we can start from, yeah, it's up to you. Yeah, from Steve or from Jim, it's up to you. Who wants to start first?
I'll just say a few very brief remarks and turn over to Jim. Yes, it is a dividend, we believe, for Indonesia. Indonesia has a young population, which puts it at an advantage compared to other parts of Asia where aging population is a big concern. And even in Thailand, it's increasingly a concern, certainly in China, Korea, Japan. So this is one of the factors that keeps potential growth over the medium term up for Indonesia, is that large and young workforce. Jim, anything to add?
No, I mean, I agree. It's quite unusual considering the population trends in Northeast Asia and increasingly in places like Taiwan and Thailand and Singapore. But I would just emphasize that taking advantage of the democratic dividend or the demographic dividend is not automatic, and you have to have an investment climate set up and an economic system set up that makes it easy for all of those people to get into employment. Otherwise, you're just going to have a lot of unemployed young people. So ensuring that the business climate is strong and that it's easy to hire people and that it's easy to start new businesses and that those can continue to grow, that's the best way to take advantage of the dividend.
The last question for Mr. James from Hari. If China is going to slow down, would the China's government to depreciate the yuan? If so, would this drag down the rest of the regional currencies, including the rupiah?
I think you should direct this towards Stephen, because as I said, we can't do exchange rate.
Okay.
The IMF is very smart in staying away from predicting exchange rates, which is always very sensitive in Indonesia, I know. One of the challenges for emerging markets next year, we think, will be a stronger US dollar, because there's going to be divergence in global monetary policy. We're all expecting the US Fed to advance its tapering and to start hiking interest rates, but we expect the European Central Bank, the ECB, and the Bank of Japan to stay very accommodative. No interest rate hikes in Europe, we think, until 2024 at the earliest. So that's going to cause upward pressure on the US dollar, which is always a challenge for emerging market currencies and financing conditions. So we would expect China's currency to start coming under some pressure next year, and the regional currencies across Asia, including the rupiah. As we speak today, the currency in China has been appreciating even against the stronger dollar. So in trade-weighted terms, the value of the Chinese yuan is very high, and that reflects the very strong export growth and the external services balance. Just as here in Hong Kong, China has tight restrictions on travel, so we're not seeing Chinese tourists going anywhere. So that's eliminated demand for foreign currency and keeping the currency strong. But we expect these currencies to start depreciating next year, which will challenge emerging markets.
So I haven't asked you, Stephen, about the fair and equilibrium exchange rate for rupiah. So what is your forecast for next year about the equilibrium or fair exchange rate of our currency?
Yeah, so the currency over the past year, and the rupiah has been very stable, just over the 14 15,000 level against the US dollar. And over the course of the year, we're expecting some depreciation. As I said, we don't, like the IMF, we don't really do currency forecasts per se, but we do publish them. And we would not be surprised to see the currency gradually weakening during the course of the year toward the 15,000 level is entirely possible by the end of next year.
Okay, so I have one more question to you, Stephen, about the, we are still behind our country rating, I mean, so from rating, behind Malaysia and Thailand. And we have been quite a long time with BBB, right? So to emphasize, even though you have already presented in one of your slides, to emphasize more, what is, to be specific and more realistic, what should Indonesia do to have a, let's say, a rating upgrade? If not next year, then let's say early 2022. Yeah, what is still lacking or lagging behind in our policy or our economy?
Yeah, I keep coming back to three factors. One is the external vulnerability. Indonesia, compared to these other economies that you just mentioned that have higher ratings, is very dependent on foreign portfolio flows.
Yes,
so to the extent that more of these flows can be channeled into foreign direct investment, which is much more stable than hot money flows into currency and bond markets, that would be positive. But doing that takes a long time. So it's not the kind of thing we'd expect to see just in 1 year. A second fundamental weakness for Indonesia compared to others is the low revenue ratio of the government. The revenue ratio is actually the fourth lowest of all global sovereigns that we rate. So we think it's encouraging. I'm sure your investors aren't happy to pay more tax in Indonesia, but we think that it's quite remarkable that the parliament passed a VAT increase for next year. And that together with better compliance, which is an initiative that was going on during my days in Indonesia many years ago, is still on the table, we think, for the government. So improving that revenue ratio. So if I could highlight two things, it would be the revenue ratio and reducing external vulnerability by diversifying more into FDI flows.
Okay, well noted. Yeah, thank you very much.
That's enough for us.
We don't open the question and answer live. Participant, no more time.
No more time.
Okay.
So it's enough. Thank you for an interesting discussion, Prof. Budi, Prof. Ari, Mr. James, and also Mr. Stephen. Before we end our event, may we do some photo session, please? Pak Ari?
Pak Ari, yes. Please, someone
to
ask or send a message to Pak Ari to open the camera.
Pak Ari? Maybe only four of us, Mr. Stephen, yeah, sure. Mr. James, and also Prof. Budi. Please take a picture. I give some 1, 2, 3. Okay, one more time. 1, 2, 3. Okay, thank you, Prof. Budi. Thank you, Prof. Ari, and also thank you for all attendance. Thank you, Mr. James. Thank you, Mr. Stephen. Dan sampailah kita pada acara yang juga tidak kalah seru ya, yakninya pengumuman pemenang door prize di hari ini, di mana door prize kita itu adalah RDN. Yang pertama RDN 2 juta, dan untuk 5 orang lainnya adalah RDN sebesar 1 juta rupiah. Untuk 5 orang pemenang dengan RDN sebesar 1 juta rupiah adalah Bapak Andi Muhsin dari Dana Pensiun Semento NASA, Malisa Salsabila dari Universitas Indonesia, Sebastian Felipe dari Universitas Indonesia, Camar Remoa dari Insight, Rahmat Desmi dari Dana Pensiun Kaltim Primakol. Selamat, Anda akan mendapatkan RDN sebesar 1 juta rupiah. Lalu pemenang utama kita adalah Bapak Ahmad Fatan Mubin dari BRI Life dengan RDN sebesar 1 juta rupiah. Selamat kepada para pemenang, nantinya akan dihubungi oleh para tim kami. Lastly, thank you for taking the time to join our event today. Ini merupakan bentuk komitmen kami untuk memberikan layanan terbaik tentunya bagi para mitra Samuel Sekuritas Indonesia. Saya, Fikri Cepermana, atas nama Samuel Sekuritas Indonesia mengucapkan mohon maaf bila terdapat hal yang tidak berkenan. Terima kasih, and see you in another Samuel Sekuritas event. Thank you.
Thank you very much. Yeah.
Thank you very much.
Presentation, discussion, very enlightening, inspiring. Even Stephen.